I'm Doug McKenzie, and welcome to this episode of the Fintech Show. This week, we're joined by digital banking accelerator Avoka, who help us take a closer look at KYC and customer relationship management in 2018. We'll also be getting insights firsthand from HSBC and Atom Bank. We wanted to see what our interviewees believed are the biggest challenges currently in the industry. What are some of the biggest challenges facing some of the financial institutions currently?
Well, their business models are fundamentally being disrupted. We've got obviously challenger banks like Tandem, but they're doing things like they're sharing profits with customers, which is not something that banks have traditionally done. They're actively helping customers avoid behavior in transactions that would have, for a normal bank, generated fee revenue. Then we've got the branch paradigm, where the paradigm shift, I guess, in the branches, where people have been used to going to the branches. The banks have relied on the branch processes to perform certain transactions. People aren't going to branches anymore, so they can't rely on that. So they need to shift that reliance on the branch. And then you've got tech companies like Amazon who are actually issuing billions of dollars of loans to small businesses who are using the Amazon platform to sell on. So I think we're in an environment now where, to paraphrase Charles Darwin, it's not the intelligent and it's not the strong that survive, it's the adaptable that are going to survive.
I think the biggest challenges, but actually there are opportunities, is marrying what customers want with what the technology can do. So it's not our job to be at the completely leading edge of what technology is, but we do need to understand where customers are. So just to give a couple of examples, we're rolling out biometrics. We've had a huge reduction, over 70%, in the number of people needing to log on using their passwords. But at the same time, we have a big issue with trust. In fact, we've got some great research that shows twice as many people would trust a robot to perform open heart surgery on them compared to open a savings account. So we need to use the technology, but we need to take customers with us and make sure the issues of trust and security retain that.
The challenges for customers is that the banking industry looks strangely familiar if you look at it today and you compare it with what it was like about 20 years ago, in that a small number of banks continue to dominate the banking landscape. They continue to have the vast majority of the customers, irrespective of whether you're talking business customers or personal customers. They have most of the products, they have most of the balances, they have most of the savings, and they continue to rule the roost. So at the same time, the willingness of people to switch accounts is still very low, and that's in spite of a number of efforts on the part of the industry to encourage switching, like CAS, to make it sort of a little bit more, if you like, trustworthy and easy, a little bit more dependable. And so really, it's still a very much dominated industry. It's still pretty low on innovation. There's been a period of pretty, if you like, stable but low growth. Economically, the landscape looks a little bit dormant, for want of a better word. And of course, with Brexit sort of coming over the horizon, there's a few question marks about the sort of general health of the economy lying ahead. So I'm not a very positive picture, but in that there's a whole bunch of opportunities.
So the banks need to adapt to the current environment that they're operating in. And they're aware of this, but big banks don't move quickly, they don't adapt quickly. And when they try and do things quickly, we see situations like we're seeing at TSB at the moment, where it's serious, they need to get these things right. So they're trying to find that balance between getting things right, but change and adaptation and so on. And so it's a really exciting time for the sector, but it's also a challenging time because there's so much change happening.
What do you think is kind of the underlying cause why people do not switch bank accounts? Because most people still stick with whoever they open an account with, who happen to have a branch around the corner from them.
Well, I don't think there's any great mystery about it, because I've researched it, for the last 30 years, frankly, and customers will keep telling you the same thing. First and foremost, they don't think there's a big enough difference between the banks to justify moving from one to another. So it's not like, you're going to go from bank A to bank B or C and think, well, gee, that's a whole lot better, and so it's worth the effort. Secondly, it is effort, and there's concern and uncertainty about direct debits and standing orders being sent and received correctly. So, if you're worried about your mortgage payment being missed, then that's a bit of a sort of niggle in the back of your mind. Thirdly, there's not enough incentive. So what's in it for me if you're a customer, right? Not just is it better, is the service better, but also is there a better rate, is there a better offer? So there's a bunch of factors, but mostly it's about difference and distinctiveness and uniqueness. There's just not enough of it.
Why are some of the institutions still finding it hard to onboard customers?
I think fundamentally they look at it from the bank's perspective out. They look at what the bank needs, they look at the information the bank needs, they look at the way the bank systems work. And as they move to digitizing that, they're imposing how they operate on the consumer. And consumers don't like that, and they're not used to that. And that's not the experiences that they have with someone like a Spotify or an Amazon. It's more driven from the customer perspective in. And that's where the banks need to move to. They need to be onboarding customers based on how a customer wants to interact with them, not how they want to do this. They're struggling to measure how well the onboarding process is currently working for them. If they're losing customers, we spoke to a bank recently that told us that 90% of people who begin an application to open an account abandon, they leave. So they're converting 10% of their customers. If that was Amazon, whoever was responsible for that would have been fired a long time ago. So they're struggling with this kind of measurement and then continuous improvement, understanding how and where they should be improving the onboarding experience. They're aware that they have these challenges, but actually making the change, being agile, adapting to the expectations of the modern day consumer is proven to be a challenge for them.
Josh Bottomley explained what HSBC are doing to maintain their relationship with such a massive customer base. How do you maintain that same relationship that you had before with your customers and keep the HSBC logo relevant and still in people's minds?
There's two aspects to the question. It's making HSBC relevant in people's life in a digital world. And that, I think, is something I feel very passionate about, that there is a shift in banking. Banking used to be very, what I call episodic. You went to a branch or you called a contact center. Maybe you went to a website. You didn't do it very often. And what I really hope for our customers is that we make it much more personal and relevant to them. We are permanently sending either nudges or notifications. Even the most basic things, like if you redeem a credit card offer, we may well have to actually, with GDPR, actually say, yes, do you give permission for your data to go to this particular restaurant because you want the data there to get your discount for the offer. So I think we're going to make it much more continuous. And in doing that, we build the position of HSBC. In fact, what I'd be delighted for is people to start saying, I really like HSBC, not just because their mortgage rate is better than the competitors or because the offers are better, but because my financial behaviours, because I behave better as a customer with respect to my money because I'm banking with HSBC. And if we do that, I think we can really reinforce the brand, the positioning, and make that a really exciting future.
Derek Cochran from Avoca detailed how their services and solutions actually help the institutions with the customer journey when onboarding new clients.
First of all, we're a dedicated platform purely focused on onboarding, and that gives the bank the agility to design from the customer perspective in. So to look at what the customer needs, build an experience that customers are going to actually enjoy completing, and then we can reformat that data so that it matches up with what the bank needs. The second component is the analytics to actually understand if there are issues, if there are challenges associated with that application experience, where, exactly where, which field in the application form is causing a problem. And we've seen our customers gain incredible insight from looking at that level of detailed analytics. They've seen that things like the disclosures that they're presenting, the content that they have to make customers aware of, are scaring customers off. So by being able to understand that that specific piece of text is what's causing the problem, allows them to then work with their compliance teams to iterate on that, make it more plain English, less intimidating. And we've seen results where conversion rates have increased 10, 11, 12%, just making simple changes like that. And then thirdly, we provide the bank with the agility to be able to make the changes that they want to be able to make. So once they understand those problems, not only can they update the customer experience, but they can also access a catalog of fintech providers. So if I know that we're struggling with somebody completing the loan contract at the end of a loan application, they're not signing the contract, and we want to experiment with an e-signature, we've already built integration to Adobe, DocuSign, and Vasco, so the bank can choose who they want to work with. If the identity service is not approving enough customers, we're not verifying enough identities, because we've got some thin file customers who've maybe come from overseas, we have probably half a dozen different identity providers that they can plug in to their onboarding experience to say, hey, maybe another vendor is actually going to give me a better result than the one that I'm working with today. So back to that analogy or that reference to Darwin, we're trying to help the banks be more agile and be more adaptable to the environment that they're operating in. The banks have traditionally treated every customer exactly the same, regardless of whether you're a UK resident that has a mortgage, you're 50 years old, you've been employed by the same employer for the last 30 years, or you're a brand new resident who's just come into the country and you've got a thin credit file and so on. The KYC process has been pretty much consistent across everybody. It's been standardized. What we're seeing more of a trend towards is dynamic KYC. So we can collect some initial information about the customer, perform an initial verification and say, yeah, you're good. We've got enough at this point to be able to say, yeah, let's go ahead and open an account or issue a credit card. But then if we don't have enough confidence that we're dealing with the person who they claim to be, then we can progressively ask for more information until we do get to a point of being confident. Historically, what would have happened would be you present information, you're either approved or you're declined, period. So whereas now we're in a situation where you can be approved or, yeah, you know what, I need a little bit more information, so let's ask for that progressively. But let's not ask for that from everybody, because we're just going to frustrate the individuals who are, we have perfectly adequate information to be able to open an account. Now, unfortunately, we're now in the world of data breaches. So a lot of the information that you need in order to be able to open a bank account is available on the dark web. There's a term on the dark web called a FULZ, F-U-L-L-Z, and that's basically enough personal information to be able to do something like open an account, which then can be used to facilitate money laundering. So we're now adding additional capabilities in, like photo ID capture. So if you take a photograph of your identity document, you're less likely to be a fraudster, because it typically costs about $100 US to manufacture a good quality fake identity document. So why would I do that as a fraudster? So if you give me a good quality image of a document, you're probably a real person, and we have partners that will verify the authenticity. We can then take it to the point of doing selfies. So you take a selfie and upload your driver's license. I'm going to match the photograph of your face to the photograph on the ID using facial recognition. So yeah, that looks like a real person. Right through to the point of doing a video interview, where you can have like the equivalent of a FaceTime conversation between a banker and the person who's applying for the account via their phone in the browser. Just say, hey, is that Derek? Yep, okay, I can see your face matches your ID. We just needed to confirm that. Thanks very much, we're done. So it's like a 10-second conversation, but it's almost the equivalent of a branch interaction. Now, we wouldn't recommend that for everybody, because it's still an impost. You could be on the tube, you may not want to have that conversation while you're opening that bank account. But at the same time, if we feel like the risk level associated with this applicant is sufficient that we should go to that point, we can dynamically kind of step them up to that additional level of video verification. So there are a lot of options to make sure that we're not just meeting the regulatory compliance for KYC, we're also meeting the bank's risk compliance to make sure they actually know who they're dealing with.
Next, we spoke about collaborating and how operating with a fintech within the confines of an institution actually can help development in the future.
How do you decide what you want to build and keep in-house, and how do you think, this part of the sort of payments element we're going to outsource to a different company or have as a third-party provider?
That's not a very easy decision to make. And because the number of factors that you're trying to consider aren't just about whether you can do something quickly or produce a good product for a customer. You're also looking at information security, you're looking at data security, you're looking at cost, you're looking at management, ongoing management of a relationship. Because the technology endpoints are only one part of an ecosystem. Once you've got a technology endpoint with a partner, you are now in a relationship with them. If they don't do their job, your customer suffers. If you don't do your job, their customer suffers. And so if you like, the development and negotiation of an API-based or an open ecosystem is in part technology, but in part it's about really understanding where your risks lie, but also where the opportunities lie in the market and what customers want. There's an awful lot of technology out there that's looking for a problem to solve. And I think you've got to start with the customer, right? Which is, what do they actually want of a bank, as opposed to what can you develop and deliver. There's a whole bunch of stuff you can deliver, but it all costs money. And then you've got to square that against, well, does it actually add value? Is it going to have longevity, or is it faddish? And at the same time, We already work with a wide variety of partners in the business. Any business does, and we're no different. Deciding what to build yourself and what tech capabilities we need to have in-house is a vastly more important thing for us at this stage of our development than if you like, choosing collaborative partnerships for propositions. The real judgment is if you can't deliver it well, if it doesn't work reliably, and if you haven't got a commitment of longevity, don't do it at all.
So what is it that the banks can offer the smaller tech companies, and what can the tech companies offer you?
No, it's very funny, isn't it, that there was this story of we're going to eat the banks for lunch and it's all going to be a very different history. Funnily enough, I never really believed that, otherwise I probably wouldn't have joined HSBC in the first place to make this work. I think there is a much greater spirit of cooperation around creating new experiences for customers, making the services work, and actually making the banking industry work. There are quite a lot of interesting fintech companies that are behind the scenes. They're the enabling technology. Those are quite easy in terms of how we cooperate. So we look at things like whether you can use a blockchain solution for trade finance. We will look at different solutions for digital identity that take the hassle out of providing utility bills or other documentary evidence when you start with opening a financial product of some sort. I think the other side that's quite interesting is the customer experience. We as a bank will create a view that says this is how we think it's helpful to people to manage their money, whether it's preparing for retirement, whether it's their monthly spending. But we don't claim to have the only solution to that. And I think there's a lot of space for fintechs to help particular segments or other areas and create an experience working with the bank that may be better suited to particular customers. And I'm going to come back to repeat something I've said a couple of times. It's about helping customers with their behaviors. And in the same way that we all learn in different ways, we have different sorts of teachers, we have different styles, the best solution for you in terms of managing your money may not be the same as mine.
The technology teams are under huge pressure in this digital transformation world that we're in financial services. They're being pressured to deliver new things constantly. They're battling new payment challenges, regulatory challenges. They're dealing with the fact that Apple is launching things like Face ID, and now people expect to be able to use that to log into mobile banking. So they've got these pressures coming at them from all these different sectors, and they're under pressure to try and deliver. So our platform is something that actually allows the technology teams, the engineers, the architects inside of that, the tech group, to be able to meet the requirements of the business in a more efficient way. We've had clients implement a minimum viable product, an MVP, in as little as 8 weeks. So from beginning a conversation with Avoca to actually having something in production. But the average project with an institution takes about 4 months, which is still really fast in comparison to how a bank would traditionally deliver a new capability into the market, like a digital mortgage or something like that. But it is important to note that the bank's internal technology teams in most cases are actually the ones using our platform. So it's not Avoca. They're leveraging us as an enabler of the kind of agility that the bank wants to have.
So your platform really is a one-stop shop, effectively, for the institutions to be able to implement? Yeah,
absolutely. We're kind of acting like a hub, where on the one side we're connecting to the customer, we're collecting information from the customer. On the other side we're connecting to the fintech providers in the market, whether it's photo ID capture or identity verification or fraud prevention. We're allowing the bank to plug in those services, and that integration, the way we've designed it, we can't build everything. There's just too much investment going on in the fintech market. So we've built the extensibility, so if a new vendor hits the market this month and they're offering an incredible capability to do X, we have the ability to plug them in. It's that kind of plug and play, and we're making that easy. And then on the third side of the hub, we're connecting into the bank's core systems. So we're not their core banking system. We're not their loan management system. We get the information they need into those systems so that they can create the new customer account or create the new loan application. And that, acting as that hub, it gives the bank that flexibility to be able to connect to what they need to be able to connect to.
Thanks for watching, and be sure to join us on the next episode of the Fintech Show.